Okay, this is Tuesday, August 11th. This is the Anderson Report. Never a dull moment in the markets, and we definitely have things to talk about this evening. So, clearly, the markets were having a pretty good day. They started out very strong. I should say somewhat selectively strong, with the Dow Jones up 1% to maybe a little bit more for a good portion of the day. The industrials have been strong, the cyclicals have been strong. I think this is one part a follow on rally from what we had yesterday. And my fear was that it was also one part a rally based on this report very early in the morning that Russia had a what they were calling a vaccine for the coronavirus. And gold started out sharply lower, which made kind of reinforce the theory that a lot of people have that gold has kind of been a hedge against the tremendous uncertainty over when there would be a what would finally cause a big break in the coronavirus outbreak, either a widely distributed treatment that was universally accepted as being very highly successful, and or a vaccine on top of it. So the Dow was much stronger than the S&P, which we saw yesterday and maybe a little bit toward the end of last week. The uh, the Dow was the Nasdaq was also lagging, similar to what we'd seen. And then as the day went on, we got past 2 o'clock. Yeah, maybe there were a couple of headlines about look, the negotiations between the White House slash uh, Senate Republicans and the House Democrats were going absolutely nowhere in terms of a stimulus 4.0 package, despite the executive orders that Trump signed. And so maybe that was part of a cause for some of the sell off. But I just think that the market was a little ahead of itself. The Dow and the S&P had rallied for 7 days in a row. The Nasdaq had been down for a couple of days, but still at pretty elevated levels. We didn't have sharp, steep declines in the Nasdaq, and we're just a lot of people could probably tell from my tone the last few days that I thought we were set up for a pause, if not a correction. So um, that's pretty much what we're going to get into tonight. This is the Anderson Report. This is my YouTube channel. It's titled The Anderson Report. If you are watching either now or later and you haven't subscribed yet, please subscribe. If you want notifications on when the next broadcast will be, please hit the little like button. It's actually a bell just to the right of the red subscribe bar. And also, please hit the up thumb or up finger like sign for the broadcast if you like it. And any questions that you have, please shoot them in. A number of questions very late in the day on the sell off in the Twitter sphere. And I'll answer some of those regardless of whether they show up in the chat tonight. So, also, if you aren't able to watch on YouTube, I think that YouTube is probably a little bit better broadcast. I think the most people tell me that the Periscope broadcast gets a little jittery on occasion. I've noticed that on some Periscope broadcasts I watch on occasion. But my Periscope channel is TJ Anderson 12, and my Twitter handle is TJ Anderson. One, I'm sure I will have a number of comments on the market tomorrow, starting pretty early in the morning to see if there's any follow through to this kind of a mini reversal that we had late in the day to the downside. If that reverberates around the globe to Asian trading or European trading at all. I would say that one of the other reasons that the market started out so strong was that European markets were very strong right out of the chute this morning. 5:30, 6 o'clock, an hour and a half to 2 hours into their trading day. Yeah, the FTSE was up 2.5% in the UK. The German market, the DAX, was up 2.5%, and the CAC in France was up 2.5%. So pretty much universally, UK and the Europe up 2.5% right out of the chute. They seem to have peaked with all their coronavirus outbreaks maybe about 3 or 4 weeks ago. We're maybe hoping that we peaked last week. Cases seem to be down a little bit. Hospitalizations are down a little bit, particularly in what had been the hot spot areas of the country over the last 6 weeks. I've mentioned them over and over and over again. South Florida, parts of Texas, big population zones in Texas, and there's plenty of them. Arizona, primarily the Phoenix area, and a number of areas in California. So, I think that the Europe closed well before we sold off. They may open a little weaker tomorrow. European markets closed at about 11:30 U.S. time. They finished the day not quite as strong as they were very early in the morning, but still up at least 1.5%. One question here: where do you see large cap banks this week and next? They held pretty well. They did hold very well. They held well, Greg, and the regional banks also held quite well. I think that will be very interesting to watch tomorrow. I think that part of it is that they have been behind the market quite a bit, and that also rates are a little bit higher. Where like a week ago, the beginning of last week, the rate on the 10-year note was below 0.55. Maybe it was even 0.52 if you went into 10 days ago or so. It creeped up a little bit toward the end of last week. Today, I think it got up to 0.55, 0.65. And I've mentioned it numerous times. I would like to see that rate at least hold the 0.6, ideally 0.65 rate. I'd love to see it get up to the 0.8% on the 10-year. I really don't think that's indicative that inflation is around the corner. Yes, we did have a producer price number come out today. Grocery prices are maybe up a little bit. I think more realistically than that, when you go to the grocery store, you don't get as many buy one, get one free, steep discounts on some items like you see occasionally at the grocery store. $8, say $6 things that are $6.50, 2 for $10. Clearly, the grocery store sales throughout the pandemic and the stay at home have been way up. I mean, Kroger's very clean grocery store. I mean, they're in groceries. They're not in any much else. They don't have garden centers. They have groceries. Okay. Kroger's revenues in the I believe in either the whole second quarter or the month of April were up 23% year over year. That's unheard of for a grocery store chain to have that kind of spike in their month over month sales, and it wasn't all uh, paper toweling, toilet paper, and Clorox wipes, um, because so many families were home. People were working from home. The groceries were, you know, just a very hot item for the stores. So they didn't sharply discount a lot of them that they otherwise will from time to time during the year. You always notice it. Certain items on occasion get discounted. Those have been a little bit less. So the PPP number did come out today, uh, plus 0.5. It's certainly not indicative that inflation is rampant around the corner. Yes, used car prices are up. Number of stories about that in the financial media over the last few days. Um, but look, retail sales numbers, they're going to X out food and auto, even though they're a big part of what people spend money on. They still X them out because they feel there's seasonal factors that affect food, and autos are big ticket items that if you have a rash of buying or a big decline in buying, have a big effect. Yeah, John. Uh, Joe Biden did make his highly anticipated announcement today that he has chosen Kamala Harris as his running mate. I think it was everyone pretty much thought it was down to Kamala Harris and Susan Rice. Um, and clearly, every candidate always has certain advantages and potential drawbacks. Um, I'm not going to get into it in depth, but it's going to be a hot topic of conversation, obviously, this evening, tomorrow, probably for the rest of the week. I don't think it's going to have that big of an impact um, on the market, but it does take out one very major item of uncertainty for the election, which of course will get more and more focus over time as we go on. Now, like 84 days, 84, 83 days, just less than 3 months to November 3rd. So, markets today, um, look, the Dow Jones finished with a decline of 100 points. It was down 0.4%. It might have felt like a much bigger deal than that if you were watching the markets closely during the day, because the Dow was up 300 to 325 points for a good chunk of the day, traded as high as 20 over 28,100, closed at 27,686. That's not quite a 500 point reversal, but not that much of a decline on the day. But if you were watching from 2 o'clock to 4 o'clock, it felt like a sharp sell off. We're living in a world of large numbers with the Dow at, you know, above, scratching 28,000. Okay. Now, the S&P 500 got very close to what would have been a new high. And when I say new high, I always talk about closing highs. I will talk about intraday numbers for major market indexes on days when there are big inflection points in the market or major reversals. I don't really view today's market as a major reversal, kind of a mini reversal. Um, it was definitely a sharper sell off in the last 2 hours of the day than we've seen over the last couple of weeks. So it's going to catch some attention. And the S&P 500 got to 3380 at around 2 o'clock. The old all-time closing high was just above 3386. So that's pretty close. But we closed at 3333 and change. So close to a 50 point reversal from its high to its low. That being said, that's about 1.5%. I mean, you go back into March and so forth. We had a lot of 2% moves intraday in the S&P 500. Now, the Dow and the S&P had risen, had gains for 7 days in a row. Look, the Dow had a 350 point gain yesterday. It was up 325, 330 points today for a good chunk of the day. That would have been close to a 700 point advance over 2 days. It's a little much. Okay? Um the Dow was down less than 0.5%. The S&P 500 down a little bit less than 1%, 0.8%. The Nasdaq was down 185 points. That's a little bit less than 2%. The Nasdaq at between 12:30 and 1 o'clock was green on the day, meaning it was in positive territory. Okay? But it was well behind the Dow and behind the S&P 500, as it has been. Really, it was like that Friday. This is the third day in a row um, that it's been down and trailed the other two major indices. The Nasdaq still has very sharp gains, quarter to date, up close to 8%, and was up 4 days in a row last week going into Friday. Um, the stocks that have been driving the internet traffic trade, Microsoft, Facebook, the names. Okay. They just, they've had big gains. I mean, Apple was up 10% from its earnings from about 10 days ago. So Apple was down 16 or 17 points today. Okay. If you look at longer term charts of these stocks, they are still in very clear longer term uptrends. Okay, but the Nasdaq was down over 180 points today. That's 1.75% to the downside. It almost got back up to 11,000. It closed at 10,782. We'll have to see if the Nasdaq continues to correct and continues to work some of this overbought condition out of these big cap, mega growth tech names that have been driving the internet traffic trade and driving the NASDAQ composite rally. Now, the Russell 2000 had a pretty significant reversal today. It was up as much as a point. I think it was up 1.25 points. It traded over 1600 at its highs, maybe around between 1:30 and 2 o'clock. It closed at 1575. We're dealing with much smaller numbers for the Russell. It finished down 10 points or just over 0.5%. It was up 1.25% at one point in time. So the Russell had close to a 2% reversal from its intraday highs to its lows, but not a really big decline on the day. We've talked about it a lot. We're going to be watching it closely tomorrow to see if I still think there's some rotation coming from out of the information technology stocks, consumer services stocks, your big tech leaders into the small cap space. I see a number of very smart money managers commenting that they are increasing their allocation to the small cap sectors for the second half of the year. We'll see how that plays out. The Russells had a big run. It was down 0.6% today. Now, the advanced declines on the day were even within, 50 issues or so for the NYSE. Now, I will say, when you get big declines late in the day, sometimes the advanced decline numbers don't really catch up to what really went on in the market, because there may be a lot of stocks that had been up $1, $2, $2.50 that finished the day up 5 cents or 10 cents. So there may be a lot of stocks that came well off their highs, but if a stock is up 10 or 15 cents, that's one issue that's an advancing issue for the advanced decline stats. If a stock is up $3 or $4, that's one issue that's an advanced decline for the advanced decline stats. So today's a funny day to look at the breadth of the market. Yeah, you can say it outperformed the averages. It was flat. I didn't look at it at 2 o'clock to see how much those numbers deteriorated in the last 2 hours. I would bet they did a little bit. We got to watch it closely tomorrow because I just get the feeling that we're probably going to start the day tomorrow lower. And then we'll see how aggressive the selling is and where the buyers come in, what the real support levels are, whether it's 26,400, whether it's 27,400, whether it's 27,000. S&P 500 down 30 points. We were down 26. We were down to over 26 points today on the S&P 500. If we pull back another 30 points, we'll be right at 3,300, kind of a round number. We'll see if that's support for the S&P. It did a great job just 2 weeks ago, 2.5 weeks of holding the 3,000 level and then the 3,100 level. We'll see if the S&P can chart out a little bit of a pattern of on pullbacks, higher lows, higher lows, higher highs. If you remember back to when the Nasdaq first hit 10,000, we had a very sharp decline the next day. About 2 weeks later, we had gotten all the way back up to new highs again. And then we had a pretty significant decline of about 3%, but we made higher lows. And the Nasdaq has repeated that portion all the way up. So the Nasdaq, 10,000, just below 10,800. Remember, 10,800 was a tough level on the way up. We got there twice and failed before we went through it. Now we're at 10,782. Is it that significant? I don't think it's wildly significant yet, but clearly we're going to be watching it the next couple of days. In fact, on the NASDAQ, the breadth of the market was a little bit more to the downside than the NYSE. There were 3 decliners for every 2 advancing issues. So certainly not by any stretch a rout in the market, but a little bit of a wake-up call potentially for some people that may feel that it's easy for a lot of people that don't have years or decades of market experience to feel that, oh yeah, we've been up 7 days in a row. We're just going to go up and up and up and up and up and up and up. You're going to have pauses and you're going to have pullbacks. Okay. Somebody came at me on Twitter late in the day today after the close and said, do you think that did Biden's VP pick have anything to do with the market tanking late in the day? Well, the announcement didn't come out till after 4 p.m. Could some people possibly have known? Yeah, I'm sure a handful of people did, but I don't think it was leaked. And I wouldn't consider what the market did late in the day to be a tanking. I mean, look, the Dow sold off close to 500 points, but in the world of big numbers, that's less than 2% from the highs to the lows. S&P 500, a little bit less than 2% correction from the highs to the lows. It's significant, but it's not like the market tanked. But look, this is Tuesday. There's 3 days left in the week. We've got big economic numbers on Friday. We've got weekly employment numbers on Thursday. We got to see how the market handles potential support levels on the way down and the economic number. We get CPI tomorrow. I don't think it's going to be a big deal. We're going to have the weekly jobless claims, and then we get retail sales on Friday, Michigan consumer confidence, a couple of other things. I'll highlight them all tomorrow. So the sectors today, Utilities down 2.1%. Certainly not, um, you know, if the market was really being totally defensive, you wouldn't have utility stocks down 2.1%. Utilities have had a pretty good run. They were right at a resistance level, technically, that failed a little bit. Real estate, those are REITs down 1.9%. Now, look, interest rates were up a little bit. I really don't think that the 10-year yield going from 0.55 to 0.65 is a huge reason for people to say, I got to get out of the utilities. I just think that they've had a pretty good run. They were at a resistance level. They're very, very liquid. You want people want to, raise some cash a little bit. They're going to raise, utilities were due for a little bit of profit taking as big swaths of the market were. Yes, Pablo, financials did uh, very well today. John, right now it's a natural pullback. It could turn into something a little bit bigger. The if you jumped in late, the Dow and the S&P have been up 7 days in a row. The S&P got to within 10 points of what would have of what would have been an all-time closing high. I just think that we've got more work to do on the economy. And I just think that right now this is some well-deserved profit taking from in some stocks that have just moved a little bit too high, too fast. But you'll see that there were some sectors that really did not act that badly today. They could play catch up tomorrow because a lot of the selling was late in the day. And there were some comments that were nowhere on a stimulus 4.0 plan. A lot of people will use that as an excuse for the market to sell off. I think a little bit of a pullback was overdue. Okay, information technology down 1.8%. That's your big tech names. Communication services, same thing. Now, financials were up 1.3%. They acted well. The big banks acted well. I mentioned yesterday they might have got a little bit of sponsorship from Buffett, increasing his position significantly in Bank America. The banks have trailed. Rates going up can be a little bit of a positive for the banks. They like a steeper yield curve. And industrials up 0.5%. Boeing had a nice day today. And some of the other stocks, I didn't look at the new high, new low list. I didn't look at a lot of the individual stocks really late in the day. I know that Boeing was acting well during the day. I think some other industrials were also. It'll be critical tomorrow to see how they handle you always want to see the market open lower after a sell-off like this to see if buyers come in. Because if the market opens higher, people that were selling in the last hour of the day today will probably sell into any strength. The question is, will those sellers sell into market weakness? Or will they say, well, yeah, sure, I sold yesterday when the Dow was at 28,000 and the S&P was within 10 or 15 points of an all-time high. But if we open down 1%, 1.5% tomorrow, I'm not going to sell that aggressively at all, unless it feels like a day where the selling is just going to build on itself all day long. So you want to see the market open lower tomorrow because you want to see where and how aggressively buyers come in. If the Dow is down a couple hundred points in the morning, if maybe the S&P is testing 3,300, and if the Nasdaq is maybe testing, 10,500, which is down close to 300 points, just to throw it out there. I'm not saying that we're going to open that lower, but if you're, if you want the market to chart out a technical path, you always want to see selling late in the day followed through the following day to see where the buyers come in. That's where you want, look, market volatility can be scary for some people, but market volatility in individual stocks and in sectors and in market averages overall help you define levels of support and resistance. If a market is just very slowly, very boringly grinding higher, up 0.2%, up 0.3%, the S&P is up 6 points, it's up 12 points, it's up 11 points, it's up 5 points for 4 or 5 days in a row. The Dow's up 80 points, it's up 50 points, it's up 120 points. That's not really helping you define where support and resistance levels are in stocks. That's just managers with extra cash saying, I got to keep buying unless I think things are just getting a little too parabolic. So you want this volatility to help you define where support and resistance levels are on the market. Okay. Look, crude oil was down a little bit today. Went out at 41.68. It had gotten close to 42 yesterday. I still think that's pretty good for crude oil. I mean, holding the 41.50 level. You're going to get an inventory number tomorrow. We'll see if it creates a little volatility there. Gold was a big story today. Started out weak, never really rallied at all. I thought that maybe gold was down hard initially because, this, even though I thought the story was a little ridiculous, this story that Russia says they have a vaccine for the virus. Now, our medical professionals would say, look, all Russia ever did was put that vaccine through what we would call a level 1 trial. Yeah, they gave it to some people and saw how, if it helped or didn't hurt over 20 days. For vaccines or drugs here, you'd go to a level 1 trial, level 2 trial. Right now, I believe there are 3 or 4 level 3 trials going on with vaccines from different companies or consortiums. And there's, testing going on. I really don't think any of the serious health professionals here are looking at the Russian statement as definitive or the fact or something that's a massive game changer. They haven't seen the methodology for it, and the brief write up on the process that they went through to test this vaccine would never, I don't even know if it would get you past a level 1 trial here. Maybe it would get you into the beginning stages of a level 2 trial, but you would need a much larger sample and a much larger time frame. So I thought that gold was, a lot of people thought that gold was just a big uncertainty thing. The dollar was, maybe a little bit weaker today. The European currencies were strong early. The EU was up a little bit. I think the pound was up a little bit. The yen was up a little bit. So on the cross rates, the dollar had to be weaker. And gold did not respond to a weaker dollar at all. Gold was down $118, down 5.8%. Went out at 1920. It'll be very interesting to see overnight how gold reacts, where the support level is in gold on any further pullback, or if it opens a little bit higher, can it hold a rally off that level? It's the biggest decline it's seen since the big rally started, I don't know, a couple months ago. Some people would say 4 or 5 months ago. Silver, also very sharp decline, down 15%. $4.50, had closed above 29 last night, went out at 24.85. It'd be very interesting to see where the silver prices go. I think the sell-off in the hard commodities was pretty much limited to gold and silver. I'm sure there were big profits to take in both of those for some people. And look, we'll just, a lot of volatility there. We'll see how that plays out over the next couple of days. I don't have I don't have a whole lot else right now. I had mentioned the TSA screenings. I looked further into that. The airlines had a decent day yesterday. They did pull back a little bit at the end of the day when we had some the market sell off. Um, it's my apologies. I did not check the Dow Jones Transports. I'm sure it was down a little bit. It was up 5.5% over the last 2 days. But the number I gave for people going through TSA checkpoints, 830, 40, 45,000, was from Sunday. I checked it out today a little bit more definitively. That was the highest number we've had in the recovery. The number for Monday was about 760,000. It was up maybe 5% from what we had a week ago Monday. And most people like to compare it to similar days of the week because there's idiosyncratic differences on amount of travel on days of the week. A couple of weeks ago, it's probably 10 or 15% over where it was a couple of weeks ago. So, look, if the airlines are going to continue to increase their capacity, I know a lot of them are keeping the middle seats open. Even American Airlines said they're not going to keep the middle seats open. They're saying, look, if you book a flight and it turns out you're going to be on a full flight and that makes you a little queasy, you don't want to follow through with it, we'll let you change your flight, no penalty, through the end of the year. So, that's unusual for airlines to do that. They've had a pretty good move, some profit taking in them today. We'll watch this TSA screening number. Monday, a little bit less than Sunday. I think Sunday is usually a very heavy travel day. About 750, 760,000, higher than the last couple Mondays. So that seems to be trending in the right direction. That's something we're going to continue to follow. And economic data coming up. CPI tomorrow. Obviously, weekly claims on Thursday. And then we got retail sales, quarterly productivity report on Friday, industrial production, CapEx, capacity utilization numbers. Those are obviously very, very, very low. April, May, March and April. A little bit of a bump in May, a little bit of a bump in June. Be interesting to see what they say about July. And Michigan consumer sentiment. We'll see how the consumer feels about it. Potential recovery. So, that is kind of AAL was doing good pre-market. Yeah, but I think is that American Airlines? If that's American Airlines, I bet they sold off late in the day, Pablo. We'll have to check that. Only other big headline item, if you're a sports fan or not even a sports fan, the Big Ten said they are definitively canceling their football season. They hope to play it in the spring. We'll see how that works out. A lot of players and some coaches have been created some chatter about maybe wanting to play in the Big 12. Some people have said they'd like to play in the SEC. The Pac-12 out on the West Coast has said that they are canceling their football season also. Look, this is you're talking about stadiums having 100,000 people there with all the travel and all the pregame activity, midweek, late week travel, midweek travel. And I'm not talking about by the teams. I'm talking about by the fans. This is going to impact. This is not going to be good for the economy. It's just one data point. It'll be very interesting to see states where maybe if the SEC doesn't cancel their season, maybe if the ACC doesn't cancel, I'm sure there's pressure for the Big Five conferences that make up the championship seeding to all do the same. But there's going to be a lot of pressure from some of the states in the South to play football. So it'll be very interesting to see a couple months into what would be the football season, how it's affecting the economy in states that house Big Ten teams that have stadiums that hold close to 100,000 people versus Georgia, Alabama, Florida, South Carolina, et cetera, and other conferences if they continue, if they play, are they going to play in, are the Texas schools going to play? You know, is the ACC going to play? It'll be very interesting to see how that plays out over the rest of this week or when they make a definitive announcement. Um, yeah, not only, I think they said also, the story I think, John, that I've always understood is that they make money on football that funds every other sport. Some schools make money in basketball, but it's not near what they make in football. I mean, I'm sure if you're Kentucky, Duke, some of the big basketball schools, uh, you're making money or at least breaking even in basketball. But still, if you're Duke, football is not as big of a deal. They're trying to make it a bigger deal there. Don't get me wrong, please. If you're a Duke fan, don't come at me. Um, Kentucky's in the SEC. They're not the football powerhouse that a lot of the other SEC schools are, but they're in that conference. They play a lot of those other teams. They have good players and respectable. They're competitive from time to time. Um, look, we got to see. This is a big, big financial loss for the big universities. There's no way around it. It'll be interesting to see what the NCAA does about eligibility for some uh, athletes if they give them an extra year, and whether or not they really play in the spring. Anyway, that's pretty much all I have. It's 7:40. Everyone have a nice evening. Uh, look, it's the second week in August. The summer doldrums have probably been canceled along with the football season. But, tomorrow will be a critical day for the market. This could turn, there's a scenario under which this could turn into a sharp decline. But, we'll just see. I think the market's in a lot better shape than it was 6 weeks ago, and a lot better shape certainly than it was even just coming out of the March lows, even though some of the declines were very sharp. We're at a much, much higher level now. It's a heavier lift for the S&P to get to new highs than it was for the Nasdaq to get to new highs. And it's a heavier lift for the Dow to fight through all the hurdles that a lot of the companies in that space do. I would say let's watch the financials closely, and let's watch some of these big industrial names closely that have done well over the last week or the first 2 days of this week. All right. If you haven't subscribed yet, please subscribe to the Anderson Report on YouTube. Hit the little bell next to it. You'll get notifications of the next broadcast. You can also watch on Periscope, TJ Anderson 12. And my Twitter handle is TJ Anderson 1. Tomorrow will be a pretty active day on Twitter. And if you don't get a chance to catch this broadcast every evening at 7 p.m., you can always watch it on a recap. And please feel welcome to come at me with questions on Twitter that you want me to address either during the day or in the evening broadcast. Everyone have a great evening, and I'm sure we'll be talking to you again tomorrow.